A very good morning, traders. Welcome to the Flow Show, Friday, 7th of February, and a busy day ahead. Tons of events going on, data and whatnot. So lots of action to end the week with, and then it's pub time after that. How's it going, Kate?
Morning, Ryan. Welcome back, mate. Hope you're feeling better. You sound a lot better. That's for sure. So just in time, back just in time for the big show this afternoon, right?
Yeah. Can't keep me out of the markets for too long. But yeah, the cold got the better of me Wednesday night, but I seem to have burnt it all off. Apart from a bit of a sniffly nose, I'm back on the saddle and raring to go. So let's get into it. Thank you very much, guys, for your comments as well. Yeah. Right, let's get cracking because I've got my notes seem to get longer and longer every day of what we've got to speak about. So I'm going to try and get through it pretty quickly. China, third month on the trot, adding to their gold reserves. They're now up to $206.53 billion worth. So they're keeping on the buying front as there. Gold still knocking around high levels. A bit of data, let's get rid of that. Bit of data out of Japan overnight as well. And still more good news. Household spending for December up 2.3%, was expected to fall 0.5% year on year, up 2.7%. So it looks like at least they've had a good end to the year over in Japan. We'll have to see whether the early January numbers reflect that or if it's a bit of a one-off for those guys. Okay, I can't recall. Is there a big holiday season in December, in January? In December in Japan?
Well, um, they don't celebrate. It's not their new year, right? And they obviously the religion are different, so they don't celebrate Christmas either. But
Yeah.
they have a period where because they're closed, it's a big family thing around the calendar New Year. Japan is virtually closed down for 3 or 4 days around New Year. And also, which is well a bit funny, but the sorry, the Japanese couples rather celebrate their Valentines around Christmas and New Year. So there is a good reason why household spending could be up, or just spending could be up in December. So we have to see whether it's a temporary factor or not. But these just taking the number at face value, this is indeed good news for the Bank of Japan, because that is always their worry. Will the Japanese consumer spend? And well, we could say that this is a pretty decent number, right?
Yeah, absolutely. I'm just looking back, and it's not like it's historically a good month or anything like that. Um, yeah, these numbers are a bit up and down, but yeah, it's all going the right way for Japan at the moment, and that's the good thing. So yeah, and we're seeing that reflected in some of these yen moves as well.
Also, Ryan, and I spoke about this yesterday on the Jap or the day before on the Japanese wages. They do have December bonuses, so
Yeah,
that's another factor behind that could be behind this move. And also, let's forget that the other years, not forget that the other years they did not have bumper wage hikes. So this may be, all of it may be responsible for those better spendings in December. Let's see what happened next month with this.
yeah, get a bonus and go and have a little bit of a splurge, which nothing wrong with that. Um, right, well, moving on anyway. Let's get rid of that. The GPIF are doing well. Japan's big pension fund. They had a 4.3% gain in the Q4 quarter, so still making the beans, and we've got that coming up as well, where we get to hear coming into the new fiscal year their intentions for how they're going to invest for the next financial years. That becoming amidst probably all those wage negotiations as well. Now, a little bit of a bombshell headline dropped yesterday in the UK that PM Starmer is apparently looking to axe the Chancellor Rachel Reeves in a reshuffle. Now, this was reported by the newspaper The Express, which wouldn't say is the most reliable news outlet. They're sort of between the Sun and the Sunday Sport, if those in the UK know what I mean by that. So yeah, a bit more for those in the US, a bit more to the New York Post side of things rather than the Wall Street Journal side of things. But anyway, that's already been denied, but we'll wait and see if something's cooking anyway. I don't think it will happen personally, but I don't know enough about Starmer yet to make that decision. But he'll look pretty silly if he axes her that early anyway. On inflation, we had a City YouGov poll for the UK on household expectations for CPI. They came down to 3.5% from 3.7% for 1 year ahead. Longer term, 5 to 10 year expectations eased to 3.7 from 3.9. Still running at fairly hot levels, but good news. That was ahead of the Bank of England meeting. And at that meeting, they decided to cut rates by 4.5%. The vote was 9-0 to cut rates. However, 2 voted for 50 basis points, and one of those was one of the big hawks, Man. So a very, very dovish cut and vote pattern. However, the details underneath, or Bailey's statement, weren't as dovish as that vote implied. Straight after that cut, the market saw another 3 cuts coming in the rest of the year, which is largely around expectations of 100 pips this year. In the statement, the BOE said that inflation was expected to rise quite sharply in the near term to 3.7%, though it shouldn't affect domestic, i.e. core CPI that much. They cut their 2025 growth forecasts and raised, obviously, their 2025 inflation forecasts. Bailey said that we expect to be able to cut the bank rate further, but we will have to judge meeting by meeting how far and how fast the road ahead, how far and how fast that will be. He said the road ahead will have bumps. He said the coming rise in inflation is almost entirely due to factors not directly linked to pressures in the UK economy, and made the case that moving rates on the back of that is pointless. He said, we expect, though, these factors to be temporary. The considerable uncertainty over the extent to which the weak economy is due to demand or supply is the question that needs answering. We must judge in future meetings whether underlying inflation pressures are easing enough to allow further cuts. And he said he doesn't use the word stagflation when talking about these things. He still thinks disinflation trend is still in place. Overall, the lines and stuff in the statement were that they are still going to take a slow and steady approach to monetary policy. And it really is a toss-up between what happens in inflation, which they say is going to go up in the latter part of the year, and whether the economy is going to weaken further and whether there's going to be more or less slack in the economy. BOE's Ramsden touched on gold and these stories that have been bouncing around that the BOE are struggling to get orders out the door for people will want delivery of their gold. He says that the stock held at the BOE has fallen by 2% since the end of 2024, and that the strong demand for delivery slots for gold isn't a problem, and they can meet that demand. After all that, traders knocked down their expectations. Now see just over 2 cuts for the rest of the year, 59 basis points for the rest of the year. Kay, you were no doubt front and centre for the BOE. Quite a turn from Miss Man.
Oh, yeah, that was the one that knocked cable down, and I still think that was a bit of a strange move ahead of the meeting as well. So I think Bailey may start to look for a few leaks there at the BOE. because I mean, sterling came down a lot more than any other currency ahead of the news. Then they had the knockdown, and then yeah, we found support there, right on that 38.2 in the cable. Um, yeah, man, big surprise because she remained pretty hawkish, so there was no hint that she all of a sudden could go for a 50. She was even expected to vote for a hold, the 8-1. But yeah, she went. So that knocked Sterling off its pedestal, which lasted for about an hour and a half, and then gradually, we started to recover there. Yeah, the gradual approach is probably what is making this sterling recover a bit, and still, the global aspect of uncertainties around tariffs, UK getting away without, for the time being at least, without being exposed to tariff threats could still be also behind this recovery of the sterling, because we basically undone whatever happened before the Bank of England. Um, the revision for lower growth, it should not come as a complete surprise because we have seen anemic growth data over the past months. The outlook for 2025 is a bit weaker. If we would only have like 0.4%, that's not going to do too much good, I think. But in the meantime, yeah, um, I'm I'm tempted to say that sterling hasn't lost everything of its appeal yet, and we find it back in some of the crosses. Exactly the one you're showing there. Euro sterling had this spike up to 83.80, where it should have resisted, and it resisted. So this one is coming back down, um, and that I think testifies of the sterling not completely being out of the picture, or as we said in 2022, an emerging market currency.
Yeah, exactly. I think euro sterling is perfectly indicative of what we're seeing, as we were saying. Looking at all these moves recently. This was UK worries. That was UK worries easing, and then eurozone trade tariff worries kicking in there. Then you get the reversal on the Bank of England and coming back down again. So I wouldn't be surprised to see this continuing to edge lower after this. This looked like a decent rally to get on board if you don't favour the euro side of things. But maybe we'll just find a bit of balance in the meantime. But yeah, it was a very strange Bank of England meeting. But then it's typical. They really don't know what they're doing. You read all the statement, you come to the end, and you think, well, they don't know what growth's doing, they don't know what inflation's doing. They're probably the least in control central bank out of all of them, and that's saying something. But that's no change there anyway.
And
Yeah,
our last thing on the BOE, if you look at the UK gilt market, we're also back to pre Bank of England levels. So I mean, the bond market has said that they are more than happy to move on from this
yeah,
meeting.
very much so. And that trend is not for changing just yet. Right, moving on to some data we got out this morning out of Germany. Good data on the trade balance, a bit of activity showing up as well. Been a bit wobbly, but decent numbers for both imports and exports shows maybe a pickup in activity. As said, don't know if this is possibly down to more Trump tariff front running, ordering in from China and the like and whatnot, and China doing vice versa. We'll have to wait and see, but still good news. Their surplus increasing to 20.7%. What wasn't good news was industrial production dropping a whopping 2.4%. Not good at all. Year-on-year number coming in softer as well. ECB officials say that the neutral rate is not driving monetary policy, which is a true statement. Today, we've got a list of things coming out, one of which is the ECB's staffers report on the neutral rate, where they're going to set some sort of range where they see the neutral rate. Now, this, in the grand scheme of things, it doesn't mean anything, okay? It's just put a number out that the market's going to basically use as a target. Where we might get a bit of moves, and I'm not expecting much, is if the market wants to adjust its rate expectations depending on where this neutral range is, i.e. where rates are currently now and how that fits into the neutral rate. If they set a neutral rate that's pretty low, say 1 to 2%, then we know we've got room to go. If they set it at 1 to 3%, we're just under 3% in most rates. So we're sort of at the top end. So I don't know if we're going to get any real market reaction, but you're going to probably get the algos trying to make something of it. What it does moving forward, these forecasts, is obviously give, as I say, the market a target to base whether the ECB is going to be dovish or hawkish, or be dovish or hawkish in expectations. Kay, you expecting much out of this at all?
An algo belief. But it all depends, Ryan, on how wide their range will be. Because if they come out with a 1% range for the neutral rate, if they don't come out with an exact number or a 25 BPs range or so, the importance is going to be virtually zero. I mean, imagine that they say like, oh yeah, our neutral rate is 1.5 to 2.5%. Yeah, I mean that, and then that would bring everything in the middle to 2%, where all the ECB bots want to end up somewhere. No, I'm really going to try very hard not to react to that number unless they come out with an extremely low one or a ridiculously high one. And as I said, I mean, if they come up with a decent and tight range where they think it should be, yeah, then it may be creating somewhat a reaction or so. But it's over time it could become relatively important again if it's tight enough to see where the ECB wants to or has to end up. But that's to me much further down the road. I mean, perhaps
Yeah.
we are going to have to come back in autumn and see, all right, I mean, where are they now compared to where they expected the neutral rate to be? Yeah.
Yeah.
For the rest, moving on. I mean, moving on before it even came out.
Yeah, no, absolutely. As I say, it's no different to having an inflation target. Okay, you very rarely actually see a central bank hitting their inflation target and staying there for long. And the same is going to be happening with this neutral rate. The market will just be, oh, rates are at 1% and your neutral rate's at 2%. So, oh, you know, you got to do something about that sort of thing. But that's for the future. Right then, moving on. ECB's Wojcik says that we could have stagflation, where we have high inflation but lower growth. And given the high level of uncertainty, it's best to wait and see before acting. So he looks like he might be going into the pause camp at the next ECB meeting. Coming over to the data from yesterday, bit of data out the US. We had Challenger layoffs, which came in just shy of 50,000, up from the just shy of 39,000 last month. So a bit of an increase there. Don't know if we're going to see the government numbers falling into that, because that's obviously public sector layoffs rather than private sector layoffs. Then we got initial jobless claims, nothing to see there, still staying around that 220 mark. Continuing claims also in just the high 1.8s, no change there, no wobbles coming through these numbers from fires, storms, weathers, and all that sort of thing. We did get Q4 productivity, and this is just a number you just keep an eye on, because it's something the Fed looks at too. Yes, it's for Q4, but it's the latest numbers, so put it in the mix now, forget about it next week. Productivity, a bit lower than expected, 1.2% versus 1.5%, so a bit of easing there. Unit labour costs was expected to bounce at 3.3, 3.4%, so that came in a little bit softer, but that was still a big jump over Q3. So it just keeps the slightly weaker potential for the economy, but costs, inflation, wages still very heavy or very toppy, shall we say. Fed's Logan says choices in 2025 boil down to resuming rate cuts soon or holding rates steady for quite some time. So making a bit of a distinction that it might not be a quick pause or skip and then a cut again. They're either going to have to cut or they're going to have to hold. Very little middle ground. Banxico went through with a 50 pip cut as expected. They're now down to 9.5%. Although the vote was split, a bit like the BOE, everyone voting for 50 except for Heath, who voted for 25. Central Bank said they are going to consider an additional 50 pip cut moving ahead. Okay, any much out of that for the MEX yesterday?
No, I've like in diagonal read through the report a little bit. There's not enormous change in their outlooks either, and like they're really looking at 0.1 adjustments here and there. What we have to consider though is that in countries which are considered emerging markets, they have less room. I mean, for instance, a Banxico is not like one of the major central banks where they can go easily back to 4 or 5%. It doesn't work like that over there. But yeah, I think they could do another cut soon. They are still if you take into account the USMCA, they are still at very high levels. So I think we're still pending on what is going to be decided on borders and tariffs, etc. If things are not going to go as bad as could be feared, even though Mexico is going to be presented with a bill. Whatever happens in this whole plan, Mexico is going to have to pay a certain bill. But I think if it's not too tough, then people are probably going to come back and say like, well, they're still 9.5% minus funding costs and stuff like that. It's still going. It could potentially, after a while, come back as a carry trade. And I'm not in it, but I'm just looking at signs, to know what's going to go on. And I think at the end of February we will know a lot more.
Yeah, I was going to ask about the carry trade because obviously with them still cutting, it's reducing that premium that was there before.
Yeah, but the rest is cutting as well.
Yeah, exactly. Well, apart from the Fed who have now stopped.
Yeah, the Fed, but then but they did cut already some as well, and ECB cut, Bank of England cut. Well, Bank of England, I don't think that sterling makes is a big carry trade, but I mean
No.
Euromex could be one, and then I'm front running a little bit. What you're probably going to talk about next is the upcoming meeting with Ishiba and Trump. If Ishiba says, "Oh, we are going to invest gazillions back into the US," it could be that the Mex yen carry trade comes back.
Yeah, because I'm looking at this dollar mex in terms of the carry trade. I mean, obviously we've had a big unwind in this move here. Do you think that with the fact we're struggling to push on means we're maybe a bit more balanced in the carry trade now? Everyone's, a lot of people are out and they're just waiting to see what's next before getting back in it or unwinding it even more.
I think it will all depend on what's happening in February. I trust that really long termers may still be in it because let's not forget if you have a let's say Mex yen, if you have an 8% even differential, which is even a bit more right now still, but I mean you're getting 8% per year for doing nothing. Okay. That's something that you need to realize, and some people will always be in there, I think. So yeah, we had a big setback. We had like a 20% setback. That is still a big one. So a lot of people went out. But then if you look at where we started from, If you're in that carry trade, let's say even you didn't start straight in 2020, but in 2021 things became like relatively obvious. You're still extremely in the money, right?
Yeah,
And you're not halfway back down. So I think for some ultra long termers, they will still be there. But no, I think percentage wise, it's so difficult to stick a number on things. But I'd say that some are now in the waiting chamber to know whether to get back in or not. And who knows, perhaps February will be the month where we may decide whether to re-enter carry trades. And there's carry trade and what the people do like on a day-to-day virtually basis. A carry trade is not that, right? You don't enter a carry trade on a Monday to close it on a Tuesday, right? Those
yeah,
are things that you look at long term. It's not something because I mean, especially retail traders, they are like when it goes down 2%, they say like, oh, the carry trade is in danger. Forget it, okay? I mean, those people are in for the really, really long haul. And even if rates don't move, let's say for example, this max yen, we're at 740. If we don't move, you still get 8% a year for doing nothing.
yeah, absolutely. Even with the volatility, but yeah, if it's doing nothing, it's even better. But, yep. So continuation is what we're potentially going to be looking for that one. Right. Russian Foreign Ministry seems to be perhaps turning the screw on Mr. Trump a little bit, saying there are a lot of words about peace in Ukraine from the US, but no clarity yet, and that Washington needs to formulate a policy. Mr. Trump, I don't know if he was responding directly, but later on he came out and said that he's making progress to stop the Ukraine war. And our UK press as well, getting in on the sources pieces in the US. Last week we had the Telegraph reporting the possible 10% Eurozone tariffs from Trump, or the Daily Mail, which again is sort of a bit around the New York Post, Daily Express line of reporting. They say that the Trump truce plan or peace plan for Ukraine has been leaked. Talks with Putin are coming. A ceasefire is being mooted by Easter, but an end to Zelensky's dream of joining NATO are apparently among the details in this leaked peace talk document thing that's coming about. I don't know if you heard anything on that, Kay, or whether it's been denied or added to or whatever.
Well, Leavitt is always trying. That's the White House secretary. She's always trying to soften tones and things. But no, I haven't really read anything more. The thing is, I mean, are those plans realistic? Because Trump, if that's the real plan, it's not gonna rock, right? I mean, you present a 400 billion euro bill to the European Union, but you don't invite them around the table. That's one.
Yeah,
Two, it's let's freeze everything where we are now. So meaning that everything that the Russians gained, they can keep. You retract your troops from Russia that the incursions that you Ukrainians have done. Okay, I mean that's maybe, but you don't tell the Russians to move out of Ukraine. I mean, it looks like a dead before even going to the table plan. I mean, that's how it looks from the outside to me. It's a bit of an unrealistic plan, but it's Trump. He wanted to arrange everything within 100 days of him being back in the seat. So he has to come up with something. And leaks, they can always be orchestrated and see how to see just to see the reactions. It's like
yeah,
when you sign a so-called executive order, which is not really an executive order, because you straight away put it in the bin for another month. I think this is maybe again a way of taking the temperature of whoever is going to sit around the table.
Yeah, yeah. I quite like that White House press secretary as well. She doesn't take any shit, does she? She comes out and
No, that's true. It's funny. I mean, somewhere, and I was thinking about yesterday. I spoke already about Besant. Besant is always the one who says like, okay, maybe it's not going to be that bad, guys. All right. He's always trying to water down things a bit and sitting around the table and. Yeah,
yeah,
we are going to do this, and Mr. And he always find it useful to explain what Trump means.
yeah, exactly. Exactly.
Uh,
He's definitely fallen into the good cop routine, and that was actually my next comment because I found this strange that he came out yesterday saying that the strong dollar policy is completely intact. We want the dollar to be strong, but we don't want other countries to weaken their currencies. I thought everyone was telling us that Trump wants a weaker dollar, Kate.
yeah, of course. Yeah, he
But
wants
the
a
rest
weaker
is saying he
dollar.
wants a
Yeah,
strong
of
dollar.
course. No, he wants a weaker dollar, but he doesn't want to lose the reserve status. So, I mean, there's something where, I mean, you know what? Somewhere I find it funny because it can become very tradable actually in the future, without even thinking about how ridiculous those and how contradictory those statements are. But it can actually become very tradable in the future. I mean, if you look at overall reserves, if you start to see changes and people look at Trump, oh yeah, he wants a weaker dollar. He may be right, and then come back at a certain point. Now we are okay, and then all of a sudden, the reserve status comes back to the fore, and the dollar jumps 10% again. I think, but for now, it's to me. Well, for one, it's not tradable for me. And for two, it's going to take time, and by taking time, I also mean I want to see if Besant is really going to stay on for very long. But he went Trump's way. Huh? He doesn't plan to borrow more. Actually, if when I looked at the borrowing plans, I mean, Yellen could have written that as well. I mean, they didn't need Besant for that one.
Yeah,
But yeah, he's going to be the trying to smoothen everything. But that's probably, as I said, going to be tradable further down the line.
yeah. And dollar strength and dollar weakness is always relative. Okay, you know, if you look at and I'll go to confession after this, Kay. But looking at the Dixie, you know, we're weaker than we
Okay,
were
I'll
in the
see
early
you
two
next week.
thousands. Well,
I'll see you next week. I mean, if you talk about the Dixie, I'll see you next week.
yeah, just I'm purely using it for illustration purposes. You know, the dollar's weaker, as I say, than it was in the early 2000s, but it's stronger than it has been since 2009, 2010. So
Hmm.
are we weak? Are we strong? It's all relative to where we are in the moment rather than where we are historically. Historically, we're sort of banging the middle-ish sort of area, if not slightly higher. Right, I feel dirty. Let me take it off there.
Yeah.
Right, on to jobs news. According to the latest sources, over 60,000 federal employees are now apparently decided to take this deferred retirement offer. It was reported earlier this week that it was about 20,000. Now we're over 60,000. So we're climbing at that. The deadline's been extended by a few days, if I recall correctly. Right, so we've got these events coming up today. You already mentioned the ECB neutral rate thing. We've got also a Canadian and US economic summit happening today amongst economy misters and the like. So we may get some comments there, obviously getting together while they've got this month's grace period from tariffs. But this is more to do probably with trade and stuff. However, these tariffs that have been put on hold are still only on drugs and immigration and stuff. Although if we take the comments that we had from all that last weekend, it seems Trump or Trump's side is pushing to look at trade stuff as well. So this may feature as a one size fits all summit that talks about all the subjects going on there. So if there's any big headlines from it, if there's deals done, particularly on the economic side, let alone the immigration drug side, that could be a big mover for the Canadian dollar if they're going to avoid tariffs on trade as well. Or vice versa, it could end up in a bum fight, and then we're seeing the loonie dollar CAD rocketing up again. So keep an eye on headline risk for that. As Kay mentioned, we've got the Trump Ishiba meeting, which is happening at 11:35 Washington time, which is 16:35 GMT. Now there's a opening lunch, there's a discussion, there's an after thing going on, so it might be a couple of hours before we get any comments out of that one. The Nikkei report that they're going to be discussing joint AI and chip development at the summit. Whether that's all they're going to discuss, I doubt it, but that's one of those subjects. And speaking of AI, Mr. Musk, his Doge department, apparently is using AI and sticking through sensitive federal data, according to the Washington Post. There are some court cases going on over how much access Mr. Musk gets to sensitive information, whether he gets restricted on that, but that's what's happening anyway. Right, that's the headlines done. That's a long one for a Friday. Anything else, Kate? I hope not.
No, move on. Just a word about the Trump Yeshiva meeting. There was in the schedule that I saw earlier in the week that Taiwan may come maybe a topic on the agenda, but I'm not sure, because if it hasn't been confirmed also by the White House, perhaps they want to avoid any stress during that meeting. In theory, it should be a meeting where they both are buddies. But we never know if Ishiba really wants to put it on the agenda. The thing is, Ishiba himself in Japan, his popularity rating is low. But this probably is going to be a meeting where Trump says, "You spend here, and we defend, and we help you, and buy our stuff. We'll buy yours, and we're very happy both ways." This should be the meeting like this, but we never know.
Yeah, and it'd be interesting to see if he develops the same sort of relationship he had with Abe. Well, funnily enough, one of the first things
I don't think Ishiba is such a good golf player.
No, I was just about to say that's one of the first things I looked at, whether he played golf, and apparently he used to play golf when he was younger, but gave it up when he started work. So maybe he's been down the driving range since Mr. Trump came on as president. But yeah, I don't know if they're going to have that same relationship, but we'll wait and see how that unfurls later. And just in case you wanted to know, this website here, Roll Call, it does a good job of putting up what Mr. Trump is doing, so you can see where he's at when he's signing executive orders, when he's Friday going out of golf, going out back to his Mar-a-Lago for the weekend, and that sort of thing. This is a site I used back in Trump 1.0. They used to give a forward-looking calendar, but they only do it day to day, it seems, this time around. But a good resource nonetheless. Right, first things first, Himashu, if you want the NFP compo, then all you have to do is scan our Twitter feed, Forex Analytics Twitter feed, because that's where it will be. Not too difficult to find, but for everyone else, I will put the link to the NFP competition in the chat there, so you can gain access to the competition for there. Get on it if you haven't already. Kay, you going for your usual?
I am going for my usual, but it's just a blind dart, you know. And you know what? I think if it comes out around there, my 111, 111,000. Not sure if it's going to be a real big mover. We need to talk about those revisions, right? Because it's a revision, apparently the first revisions for 2024, and everybody is expecting again how many hundreds of millions or millions of revisions we will get. It is it's quite a messed up picture right now because I've seen various research papers that call for anywhere between 600-700, but also one of the major US banks was saying that the household survey, which is usually somewhere reflecting, last year it reflected somewhere the difference was somewhere there. But it seems that those household surveys, they also don't take into account some migrant workers, some undocumented workers and things. So the BLS model seems to be off, but the household model doesn't seem to be right either. So this is for me the big question, who to believe. So is it somewhere? I mean, you can't believe any number anymore. But then I'm saying, if you can't believe anything, a bit like China, then you just go back to the normal headline number, because that's the one that ultimately is going to be put into money managers or asset managers or hedge funds models, and they say like, okay, the non-farm payrolls this month was, if it comes out as expected, 169,000, and that is what they are going to put in their models. That's my opinion now about, if nothing is right, take the headline number.
Yeah, absolutely. Fall back on that. And these revisions, they're good for a bit of intraday volatility, but they're usually forgotten about 2 days later. And then next month we do it all again with the NFP, and it doesn't matter. So yeah, stick to. We know what the trend is.
Yep.
We know that the jobs market is still reasonably strong. We know unemployment is at 4.1% and expected to stay there. We know that wages year on year are still ticking around the high 3s, 4% mark. That's all you really need to focus on. But just to go over the usual rules, headline number first, yes, it's important, though the Fed are basing decisions on the unemployment rate more so these days. And that's expected unchanged, I say 4.1%. As always, you've got to watch what the participation rate does, because that can impact the unemployment rate. As I say, what I look for is these wages, which have been staying pretty steady around the high 3s, 4% mark for quite some time. It's also Canadian jobs too, and we did have a whacking great beat last month, nearly 91,000 jumped up there. We saw gains both full-time and part-time employment. Might be some seasonality in there, being December, putting on extra staff and whatnot. So there's potential for a bit of a reversal. We are expecting around 25.5, 26,000 jobs to be added this month as well. Maybe some risk to that number if that one last month was a bit of a one-off. The unemployment rate is expected to tick up to 6.8% as well. And again, look at the participation rate for that move. So the unemployment rate has been creeping up a little bit, and that's even coming with these decent employment change numbers. So don't know why that's happening, but we know that StatsCan, again, isn't the greatest with reporting their jobs numbers. They're all crap at reporting jobs numbers. The ONS, the BLS, the household survey, StatsCan, ADP. Don't know why we bother sometimes, Kay.
Yeah. Is StatsCan still producing those numbers in Canada? I'm not 100% sure. I think they got rid of a team over there, but that was the other one that they brought out. No, the provisions also, the outlook also.
Yeah, still StatsCan.
I think it was another report they brought out. Anyway, yeah. Oh yeah. So yeah, I think they got wound down somewhere in 2022 or so, because their reports were so crap. So I don't even know who produces those reports anymore. Probably McLem also himself. Um, yeah, if for the Canadian dollar, we always say that, I mean, if they fall together like today, could be a double whammy. And with the uncertainties that we have surrounding potential tariffs also, it could be a bit of a volatile one, because the market is on its toes, right? We are somewhere, let's say, around the lower end of what had been seen just of late in the past coming weeks. So there may be some people just trying to hang on to a few positions. So if we have like a bit of a worse NFP and then a bit of a better Canadian report, we could see a bit of a drop there. I guess, but 142.70 is a decent level. And then 143.70, the latest stop that we did, really for the short term, that's a pretty okay level as well, because it has been a couple of prior bottoms before we really shot up to close to 148, right? So that's your range. I mean, we've got 100 pips range there. We are in the middle. I think anything outside there could provide another 100 pips, and then the market will likely start to think, okay, what's next? And we may stabilize again. That's how I look at today's data. If we get diverging data, obviously, out of the two countries.
Yeah, and I was watching this dollar CAD the other day, and it was holding really strongly, even while we were seeing other dollar pairs weakening. Cable was shooting up, Euro dollar was shooting up, Aussie was they were all shooting up, and this one was just glued. It just couldn't get through that level. Now we're what 60, 70 pips away from it right now, which is probably a bit close if we get big variation to either or both data points. So I would not be surprised if we see a little blowout, hit the stops, but what I'll be looking for is whether we get back above that level pretty quickly. If it wasn't jobs day today, I would be looking to park up some sell stops, and I might do after today if this level was held, because I think if it does go and it goes naturally rather than on a data point or something like that, I think we're going to see some decent downside in that. But yeah, it was very solid, that level at the moment.
Yeah, absolutely. And it held that there on the level, so that's a pretty decent marker. I like when levels are that clear, because that means that they are on all eyeballs and not only us retailers. Other participants which have a bigger impact in markets will also be looking at that level, I reckon.
Yeah. Mike, you asked a question. Do we believe that if the NFP comes out above 200,000, that would be enough to stop for now the slide in dollar yen? Temporarily, yes. But we had a good NFP last month, and we've done nothing but come down in dollar yen. So this is one of these times where how important is the data to the market? The jobs data is always going to be very important, but is it going to change what's going on? This isn't jobs data, this trend that we've seen from 155 down. It's looking very, very strong, the yen. Probably we're more focused on this Trump-Ishiba meeting and what's going on with the Japanese data. So, yeah, we could get a decent bounce. Look, we're back above 152 already right now. So, yeah, bounce up on NFP, absolutely. Does it change this that we've seen this month? I'm not so sure. But who knows? Got to start somewhere, right? I was looking at this dollar yen this morning, Kay. What are we seeing? Because US yields, they've sort of stabilised a little bit, but is this a lot of expectation of this Trump stuff? And does it mean
that? We've had a few comments. We had a few data, Ryan. So this is not completely out of line. We had the Tamura guy being hawkish. We had better spending. We had better wages. It's a bit of a let's say this time fundamentals data driven. So that's not too bad. We also have seen elsewhere the dollar being on the defensive. The expectations of Japan escaping tariffs. So all of that has caused this move. Now, the thing is, so two things for today in the short term is this Trump Ishiba meeting, and I suspect that Ishiba is going to come up with big spending plans in the US, and then in return, probably Trump will say that they are really good friends. So
how's that going to work in this tariff trade that we keep seeing? Is that going to be good for the yen? And we'll see further downside then, or is it going to be the opposite?
Yeah, that's the thing where all of this is, well, all of this, where this is a double-edged sword. I mean, because if you say we are going to continue to spend in the US, in theory, you're going to be buying dollars in a certain way, right? And but they can hedge, of course, and stuff. But if you continue to invest in a country, usually it's positive that country's currency and a bit negative your own. Um, because you're also will probably your big companies will follow. Okay, we've already seen that the Nippon Steel was trying to buy U.S. Steel, so that was a bit of a no-go over Biden, but. Well, Trump in theory is going to be even more against it, but yeah, that's the double-edged sword of the whole thing. But if you look at this compared to other things, the balance is probably for the time being positive yen, and also the expectations of higher Japanese yields have driven the yields higher, and so now we are expecting, with after Tamura, that a potential hike will come a bit earlier. And we have seen, as I said yesterday, last week's bond flows where the Japanese have actually sold a pretty decent amount of foreign bonds, and that may hint, early to tell, but that may hint at what I was saying like weeks ago, is that let's look at what the Japanese investors are doing, because if they start to get much more interested again in the JGB market, they will repatriate some funds, and that may be another positive factor behind the yen. So I think on balance right now, we are in positive yen territory, okay? But today, if you, I mean, imagine that 200K or above 200K print, although I maintain in saying whatever we're seeing now, and I think also for the January numbers, those January numbers will be taken before Trump's inauguration, if I'm correct, right? So all
Yeah,
these buyout plans and stuff, they are not going to impact today's numbers. So we could still have a big number today. And Trump Ishiba meeting may actually put the dollar yen a bit higher again, and then we'll have to look at the fundamentals again and everything that I've been saying about the positive side of the yen. In short, 153 three quarters. That's
yeah,
the level that I'm looking at top side for a potential running out of steam there.
yeah, up in that area there. I think we all had levels there on the way down. I mean, look where it stopped when we were coming down originally from 157 and 155. That's where we were bouncing. So that's a decent level on the way up. I just want to note, technically, keep an eye on the weekly chart. We've got the, let me do a bit of zooming. We've got the 55 weekly, 152.17 at the moment. Okay. It's one of these moving averages where if we're below for a reasonable period of time, or we're above it for a reasonable period of time. Where we close the week above or below could be pretty important for what we continue to do next week. So just on the tech front, keep an eye on that level there, 152.17 on a closing basis today. Right, let's jump around quickly. I haven't got an awful lot. On the books at the moment. Just me dollar China and me Aussie Kiwi. But cable, as you said, had that strong bounce. We're turning around this 124.50. So again, this is going to be maybe a bit of a pivot level to watch where we finish, whether it's above or below the week. We're getting a lot of this down, up, down move, sit in the middle type stuff. The range 122.50s, 125.50s. And then you got some intra ranges as well, 125, 124, 23s, that sort of thing. Doing a bit of sideways action since the bounce from 121. And as I've been saying, we are not yet turning around any of these trends properly. Okay, so particularly the longer term trend from 134. So we're still in a longer term bearish phase, despite this more shorter term bullish phase. So trends within trends, as I like to point out. I looked at that dollar CAD, Aussie Kiwi. And again, just an example, if you want to get away from the Trump trade, the tariff trade, the dollar trade, the volatility, your crosses is where it's at. because you are getting slower moves. We've got a range here, 110, 111. And again, you can mess around in the middle, 110 30s, 20 30s, 110 80s. You need patience. It's less volatility, but less volatility can sometimes be good. You can chip away, making 10, 20, 30 pips, waiting for the range edges, just, you know, building up your bank account, your trading account, and away from the volatility. I'm still short this. 111 is really a bit of a potential game changer point. If we start breaking up there, we might be going all the way back up. But otherwise, I'm happy to stay in this one. We've got the RBA and RBNZ, not next week, but the week after. So on that front, there's going to be a lot of decisions to be made. The RBA cut 50 last time, indicated they're happy to cut in the early part of this year as well. Sorry, the RBNZ cut 50 and said they were happy to cut in the early part of this year as well. But will it be another 50 or not? But bigger news is the market is expecting the RBA to potentially cut this month. I'm not sure whether the RBA are quite ready to do that. They certainly haven't indicated they're that way. So this one's going to get a bit of a vol injection in the next couple of weeks. Kay, I'm going to bounce it over to you, mate.
Just
just
looking at the clock.
Yeah, 25 past already. Do you want to look at anything or call it a day?
No, just one or two, and then I'm really not going to take more of people's time. Okay.
Didn't even see the clock.
Yeah. Gold. We saw this little drop here through this trend line on yesterday on the dollar strength coming back, but it's already back up. So the confirmation of China buying gold again. Actually, they also said that they were looking at some investor plans also to allow investors to go into gold as well. I forgot the exact line what it was. But yeah, they are still buying. I don't think they're the only ones buying this. We're still in an uncertain territory. If we get a weak NFP today and we weigh more on the US yields, this could go for a wander above the par, the 2280s, right? And the next level I'm looking at is around here, and that is around, and we can't see it really well right now, is around 2920. That's this longer term trend line coming in there. That could be a pretty good target in case we have a very weak number. Silver, very quick. We had the same setback, same break of the line, and the level that I highlighted always here, 31.60.80. It's holding. We're bouncing again. So for the afternoon, again, 32.5 for those who trade metals is going to be an important level. If we break, then we can have a look into the 33s, I think. But let it break before trading it, because it's been a decent top already a couple of times now. All right, so that for the metals. And then we need to quickly look at what's happening on Aussie and Kiwi, because we're stopping all the time just shy of the 63 level. But equally, on the retest down, we stopped around 62, 62 and a half. So that's your first little range for the afternoon, 2.5, 3. It needs to go through 3.25 to make more headway. Okay, that's the one thing I wanted to say. And on the Kiwi, we are having similar, obviously, because as the Kiwi doesn't do much, broken above the trend line, retest and held positive. All right, but we need to get through 57 the figure and 57 20 30 to move higher. If we get above there this afternoon, then I think we are on our way to potentially a bit higher levels on both the antipodians. So that is what I just wanted to show before we close, and I will thank everybody for another week in our company. Back over to you, Ryan.
Yeah, thank you, mate. I can only echo that. I hope you had a good week. Hope you have a good rest of your day. Stay safe over that data and all the events to come. And otherwise, have a very safe and peaceful weekend. Lots of relax and rest and relaxation. And we'll do it all again on Monday. Have a good one, everyone.